Welcome to this information session for the Restricted Faculty Second Mortgage Loan Program to address housing affordability challenges for faculty working on the Vancouver campus. It is intended to help fulfill the intent of UBC's Housing Action Plan, Policy Number 1, Commitment to enable approved faculty for recruitment and retention purposes to purchase homes on campus at 33% below benchmark market prices. The UBC Board of Governors approved its first pilot project for this program in February 2014. It authorized 150 loans and/or units over the next 3 years. Approximately half of these spots will be targeted for retention candidates and half for recruitment candidates. After a brief overview of what exactly is the Second Mortgage Loan Program, this session will review who can apply, more detailed features and conditions of the loan, the application and approval process, occupancy terms and the process for selling your home, a number of financial scenarios, and how to get started. At the end of this session, you will have a better understanding of whether you want to pursue this option and where to find the additional resources that are available to you. Let's begin. So, what is the Restricted Faculty Second Mortgage Loan option? It is a special loan program to help approved faculty purchase new homes on campus. UBC Properties Trust would provide approved faculty a second mortgage loan of 33% of the purchase price of a new 99-year lease unit on campus to a maximum of a $330,000 loan. It is repayable after 30 years, whether or not you sell your home. You could be required to repay earlier if your eligibility for the program changes. The annual interest payable on the second mortgage loan will be 0%. When you come to sell the unit, UBC has an option to purchase it first from you. Otherwise, you can sell to anyone, and there is no appreciation price cap. You would repay 33% of the future resale price or appraisal value of the unit and share in both the profit and the risk of loss. You will pay back the second mortgage loan with what is being called participating interest at the time of repayment if the property's value is less or greater than the price you purchased it for. In other words, if the price is unchanged, you pay back exactly what you borrowed. If you sell for less than what you paid, you pay back less than the full loan amount. And if you sell for more than what you paid, you pay back more on the loan. So 33%, or whatever lesser percentage you borrowed, of any appreciation or loss will be due to UBCPT at the time of repayment. We will see how this works in some examples later. More details on other terms and conditions of this loan are also discussed later. Now let's discuss if you are eligible for the Second Mortgage Loan Program. Application is made to the UBC Faculty Home Ownership Program in general. All full-time Vancouver faculty who do not own a home in Metro Vancouver are eligible to apply. Applicants should be aware, though, that priority will be given to full-time tenured and tenure-track faculty within the professorial and professor of teaching streams whose recruitment or retention is determined to be of critical strategic importance to the academic priorities of UBC and their individual faculty. Also, those who owned but sold a home in Metro Vancouver between April 2011 and the time of application to UBC's current program are lower priority than those who have never owned in Metro Vancouver. If I am approved for the second mortgage loan, what are the conditions I need to meet? We already discussed that your second mortgage loan can be up to 33% of the unit purchase price to a maximum loan amount of $330,000. We will show you some sample financial scenarios a little later in the session. We also discussed that repayment would be 33% of the future resale price or appraisal value, and repayment triggers will also be discussed in more detail later. Now let's go through the additional program conditions beyond the loan and repayment amount. The first condition is that the purchased property must be your principal and only residence in Metro Vancouver. Your spouse or partner is encouraged to be a joint owner. You must also purchase only from designated new projects on campus, and this list will expand. It is your responsibility to qualify for a first mortgage from a bank. They also usually will require a minimum 5% down payment and GST for the new property. You are responsible for all taxable benefits associated with this program. Since this loan has 0% annual interest, your annual interest savings below the Canada Revenue Agency prescribed rate would be taxable and payable each year. Also, any portion of the loan waived by UBC at the time of resale in the event of a loss would be deemed a taxable benefit because the amount forgiven is a benefit to you as an employee. More information on taxable benefits is provided on the Housing Program website, and you are encouraged to also seek your own professional tax advice. You must purchase your home within 15 months from the time of your approval, or the funds will be made available to the next person on the wait list. Every year, you must make a formal declaration that you continue to be in compliance with these terms and other eligibility conditions. Be sure to read the details on these conditions in the full program description on the website. And remember, UBC's existing and separate $45,000 down payment assistance program can help you with the down payment on your new home purchase. This means it can be used in addition to the second mortgage loan program. The Down Payment Assistance Program is not discussed in detail in this webinar, but information is available on our website. If you participate in this second mortgage loan program, what are your repayment options and obligations? It is important to know that the loan is secured by a second mortgage and is repayable after 30 years, or any of the following additional triggers, whichever occurs first. Either you no longer meet program eligibility requirements, you volunteer to repay the loan early, you sell your unit, or 30 years expires. The kind of life events or decisions that would change your eligibility and trigger repayment within 6 months are things like if you leave the full-time employment of UBC for any reason, if your grant tenure is cancelled or not renewed, if you leave the tenure track position for any reason, including not achieving tenure, if you cease to reside in the home on account of divorce or separation, if you move elsewhere for any reason except on a UBC leave, if you acquire another residential unit in the Lower Mainland, if you refinance the property for more than the outstanding first mortgage balance, if you retire, unless you are emeritus emerite with 15 years of full-time service at the time of retirement and the loan is not yet 30 years old. In that case, you need not repay until the 30 years. If you move to part-time service as part of an authorized UBC retirement option, those years can count towards the 15-year service requirement for the retirement exemption. Or if you die, in which case the obligation to repay falls on the surviving joint owner or heir within 1 year. Those are the major loan repayment triggers. Repaid loans go back into the faculty pool and are recycled to other faculty members. This makes the program sustainable as it becomes a recycling pool of funds that may rise and fall with the market, but will always be able to support faculty at approximately 33% of the price of a home. But you should also read Section 3.4 of the Eligibility, Occupancy, and Allocation Policy document and the summary program description carefully for more detail. These are important considerations to understand. Both these documents are available on the Housing website. What properties are eligible for me to choose from? The residential units that may be purchased through this program will be designated by the UBC Board of Governors from time to time. The list will expand as new market projects come on stream. Here is where there are currently units available for purchase or under construction and available for pre-sales now or soon under this program. Now let's talk about the application process. All the information you need is posted online, including the application form, called the Request for Consideration form. Please refer to the website for all latest cycle deadline information. Faculty sponsorship and other signatures are not required on the application form. Each new application cycle timing will depend on annual review and approvals by the Board of Governors based on program experience and demand to date and other strategic considerations. In-person help is also available from Housing and Relocation Services staff. Once I have submitted my application, what happens next? Applications submitted by the closing deadline will be reviewed over the following 2 months. After the closing deadline, the Faculty Staff Housing and Relocation Services Office will forward eligible applications to the respective deans. Results will be announced approximately 2 months after the closing deadline. Each dean will oversee the review of applications in their faculty according to both the university and faculty's strategic priorities and criteria. Deans will be responsible for this process and will consult with a reasonable number of colleagues regarding the process and its implementation. There is no quota of housing program spots for each faculty. Your dean will forward a prioritized proposed candidates list and rationale to the University Faculty Housing Allocation Committee for final selection. This committee is chaired through the Provost Office and operates with the university strategic academic objectives in mind. When considering proposed candidate lists, the Faculty Housing Allocation Committee will give highest priority to full-time, tenure-track, or tenured faculty within the professorial and professor of teaching streams considered critical to advance UBC's strategic academic priorities. Second priority will be given to other existing full-time tenure and tenure-track faculty in the professorial and professor of teaching streams. Third priority will be given to existing non-tenured full-time faculty, including full-time librarians and continuing studies directors. Approximately 50% of the available spots will be targeted for retention purposes and 50% for recruitment. Successful applicants approved by this committee will be placed on an approved list for as many spots as are known to be available in a given cycle. The committee may also create a wait list that would guarantee people a spot if someone on the approved list left or changed their mind. People on the wait list would also be first in line for any future cycle without having to reapply. The committee may also create a reserve list in case even more unexpected turnover occurred, the wait list was fully accommodated, and there was still a free spot. Those on the reserve list would be offered the spot in sequence. However, this list would dissolve at the end of each cycle, and these people would need to reapply for a future cycle. At any time, a spot may also be allocated on the recommendation of the relevant dean and with the approval of the provost for a high-priority recruitment and/or retention situation. How and when will I know if my application has been approved? You can expect to be notified by your dean when your application has been approved or if you have been placed on the wait list. Approved faculty can then contact the Housing and Relocation Services Office for more detailed instructions on what to do next. If any candidates decline their spot on the approved list, the Housing and Relocation Services Office will contact the next person on the wait list or reserve list, if applicable, to offer them an opportunity to participate in the home ownership program. If you are not approved, you are welcome to reapply next cycle, and you should also feel free to contact the Faculty Staff Housing and Relocation Services Office and see their website for other housing options that may interest you. What are your obligations if accepted for this program? First, you must continue to meet eligibility conditions discussed earlier, including qualifying for a first mortgage and committing to the purchase as a principal residence, and you must make your purchase or enter a binding sale agreement within 15 months, or else your spot will be returned to the faculty pool for someone else. While you own the property, it is your obligation to keep your property in good repair and maintain it in good condition. You must pay all strata fees, property taxes, utility and service levies charged against the property. And finally, you must prove that you have insurance against damage to property. What happens when you want to sell the property? The second mortgage loan must be repaid at the time the sale closes. You can sell the property to anyone. However, you must sell the property for fair market value. You must inform UBC Properties Trust of your intention to sell. The sale price and conditions of sale must be approved by UBC Properties Trust. Remember from before that UBC PT can buy the property. An appraisal can be required by UBC Properties Trust. Upon sale of the property, you must repay the UBC Properties Trust mortgage loan plus 33% of any appreciation or depreciation, or whatever lesser percentage loan you borrowed of the original purchase price. Now let's look at the financial breakdown in two purchase and resale scenarios that demonstrate what would happen if the price of the property goes up or down between the time of purchase and the time of sale. In the first scenario, let's assume you have decided to purchase a one-bedroom home for $525,000. There are some available for less than that, but for our example, let's use this figure. Using 33% for the amount of the second mortgage, your second mortgage would be $173,250. This leaves the remaining portion to be paid by the faculty member at $351,750, or 67% of the purchase price. Now, if your down payment is 10% or $52,500, this would mean you will need a first mortgage of $299,250. The down payment might be a bit less, in which case your first mortgage may be higher. But remember, the minimum down payment a first lender will likely require is 5% of the sum of the purchase price and GST. This will be confirmed by your first mortgage lender. Now you have your home. Let's look at what would happen if you sell and the value has increased by 20% since purchase. In this case, your home value has gone up by 20%, $105,000, and you sell it at $630,000. Your original second mortgage was $173,250. Your unit value increased by $105,000. You are required to repay 33% of any appreciation above the original purchase price. 33% of $105,000 is $34,650. Add together your original loan of $173,250 and the $34,650 increase means that your loan repayment would be $207,900. Now let's look at what would happen if you sell and the value has gone down by 10% since purchase. In this case, your unit value has decreased by 10%, $52,500, and you sell it at $472,500. Your original second mortgage was $173,250. Your unit value decreased by $52,500. UBC PT takes a 33% portion of decrease in value as well as any increase in value. 33% of $52,500 is $17,325. Your original loan, $173,250, minus the UBC PT portion of $17,325 means that your loan repayment would be $155,925. Your loan payment is reduced by 33% of the decrease in your unit resale price. In the second scenario, you have decided to purchase a 3-bedroom unit for $1 million. There are some 2- and 3-bedroom units available for less than that, but for our example, let's use this figure. Using 33% for the amount of the second mortgage, your second mortgage would be $330,000. This leaves the remaining portion to be paid by the faculty member at $670,000, or 67% of the purchase amount. If your down payment is 10%, or $100,000, that leaves you with a first mortgage of $570,000. Now you have your home. Let's look at what would happen if you sell and the value has increased by 20% since purchase. In this case, your unit's value has gone up by 20%, $200,000, and you sell it at $1,200,000. You are required to repay 33% of any appreciation above the original purchase price and can keep the other 67% of appreciation. Your original second mortgage was $330,000. Your property value increased by $200,000. 33% of $200,000 is $66,000. Add together your original loan and the $66,000 increase means that your loan repayment would be $396,000. Now let's look at what would happen if the value at sale time has gone down by 10% since purchase. In this case, your unit's value has decreased by 10%, $100,000, and you sell it at $900,000. UBCPT takes a 33% portion of decrease in value. 33% of $100,000 is $33,000. Your original second mortgage from UBC Properties Trust was $330,000. Combined, your original loan and the decrease of $33,000 means that your loan repayment would be $297,000. Your loan payment is reduced by 33% of the decrease in your property resale amount from the original resale price. Some approved faculty may wish to purchase units worth more than $1 million, but the restricted faculty second mortgage loan option has a loan ceiling of $330,000. In such cases, the $330,000 maximum loan would be less than 33% of the purchase price, and the participating interest at time of repayment would likewise be the same lesser percentage. There are other sample calculations available on the website if you wish to look at additional scenarios. What have you learned about the second mortgage program option in this session? You have learned about the zero-interest second mortgage from UBC Properties Trust. You have learned about the application process and eligibility criteria, that you can borrow up to 33% of the purchase price of a home to a maximum of $330,000. That you will not be able to borrow 33% of the purchase price if you wish to purchase a home worth more than $1 million, but you may borrow a lesser percentage to a maximum of $330,000. You must repay the second mortgage loan after 30 years max, that you can repay earlier voluntarily at any time, and that you must repay when you no longer qualify. When you sell or pay back the loan, you may pay back less than the amount of the loan if the property sells for less than what you bought it for. You pay more if it sells for more than you bought it for. The amount of the decrease or increase in payback is calculated at 33% of the change in price, or whichever lesser percentage you borrowed for the initial purchase price. You can resell your property to anyone. You have learned that you can only use this loan to purchase a unit on campus from within a UBC-designated pool of properties, and it must be your principal and only residence in Metro Vancouver. If you need other funds, you must get these on your own through another bank. You must get insurance and keep the property in good repair. Along the way, you will have questions. Here is where you can learn more about the program. Contact Faculty Staff Housing and Relocation Services directly at this number and email address, or go to UBC's Faculty Housing Program website to review the reference policy document and program descriptions. These can also be downloaded from the website. This website also provides a link to current housing projects underway in Westbrook Place at UBC. How do you get started? By participating in this webinar, you have fulfilled the first required step in the application process. It is also recommended that you get your own personal legal and tax advice before committing to this program. The next step, when you are ready to apply, is to download a copy of the Request for Consideration form from the Faculty Housing Program website. Complete the form and then email, mail, or deliver in person by the closing deadline. The form and current deadline information can be found on the website. Thank you for taking part in this session on the Restricted Faculty Second Mortgage Loan within UBC's Faculty Home Ownership Program.